Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, June 3rd, 2008. Well, we're going to take a look at the markets today. We're going to look across the board at the S&P Dow and the NASDAQ. We're also going to take a look at the commodities of oil and gold. And we want to focus in on what happened today across the board, as InTheMoneyStocks.com's call for continued downside in the markets continued today. Now, it was a wild day today. There's no doubt about it. We saw a market that was up early in the day, selling off extremely hard early afternoon, and then rallying back to close off the lows, but still down significantly by the close. And we're going to look at all this, look at the intraday charts, and then we're going to focus in on the daily charts and also take a look at oil, as oil was a big decliner today and actually was a very, very solid move down, as was gold, which was down $13.50 on gold. All right, oil itself was down about $3.50 or so, and we'll touch on that as well. All right, so let's get into the intraday charts here, guys, because this was a volatile day. I can't stress how much volatility there was on the intraday level. Well, early in the day, it didn't seem like there was a lot of volatility. Volume was so light this morning, and I'm going to show you this because it's going to blow your mind when I show you this. All right, notice here, all right, here's the market, and we're slowly trending up here. We get a little volatility right around the market open. You see a little dip right at the market open, then you see a little bit of a rally, another dip, and then we rally back into the highs. But this is funny, all right, so you ignore the pattern. The pattern doesn't really matter here. What's important is the volume. Look at this volume, non-existent. All right, we had done about 750,000 ES contracts by the time 12 o'clock rolled around, which is extremely light. So having said that, and you can see it on the chart here, early afternoon comes, and this is where the volume kicks in. And this volume made this day actually an average to above average day, even though there was no volume in the market. And look at the sell-off that started. Now, let's preempt this all by taking a look at what was going on. This morning, you had some news out of the financials, and remember, InTheMoneyStocks.com last Friday pointed directly at the financials and has pointed at the financials for the reason why we believe that the market was going to make a move lower this week. And we were dead on. Yesterday you had the downgrades, today you had Lehman news, and it is not a pretty picture out there. So here, this is really where the Lehman selling kicks in financials. Financials are getting crushed here. The whole market takes it on the chin, and we sell off. And look at this drop. I mean, this is a powerful drop. You're talking about a market from the high here, which was 1390-ish, 1392-ish, give or take, all the way down to around 1370 or so. And that's a big fall in a short time frame. You're basically talking about from 12 o'clock to 2 o'clock. In a 2-hour span, you dumped out an immense amount on the S&P futures here, on the whole market overall, and then you really saw all of a sudden a little buying pressure come in. You saw Lehman actually get defended by one of those at the company, which gave the financials a boost, and in turn the markets got a boost up here, and you can see the little buying spree that went on, and then we kind of floated down into the close. So overall, again, the markets were quite active today. You saw the NASDAQ down about 11 points, the Dow was down 101 points, and the S&P was down 8 points. So another down day. Chalk it up for InTheMoneyStocks.com, which called for a Monday drop in the markets and a continuation here Tuesday. And we do feel that there is some more downside this week, although we'll have to reevaluate the charts now to see how much more this week do we think the markets are going to go down, because let's face it, the Dow just the last 2 days is down 250 points, a sizable drop. So, I mean, you already have a large factor drop that we had called for in the market already. Now we have to analyze it to see, do we think it's going to go much lower? So let's take a look. Before we get into the daily chart, I just want to point out oil here. I mentioned in the little opening on oil, oil got crushed today, down $3 and about 50 cents. Now underneath 125 per barrel. We called for this decline, and it actually ticked a little higher. We thought 127 was the high. It went to around 135 intraday, and it since then has come back down now at 124. And we do continue to see more downside in oil, although it's going to be choppy. Don't let it fool you guys. The markets in the oil will continue to be choppy, and ultimately we're seeing more downside well below 120 over the next month or so. All right, possibly as low as 110, possibly even touching around that 100 mark, but that's a little far in advance. Let's focus on the near term, and we can really point out that the indicators are showing us a drop below 120 over the next couple weeks here, possibly even sooner. All right, and just to show you the daily USO chart, check this out. So we came down here, we had a little couple pause days on the 20 moving average, and now we've kind of moved below that 20. Now, they have a chance to save this tomorrow. Can they get it back above? If they can't, then look for more selling to continue. I'm seeing some support just looking at this chart right around here on the chart. You'll see a little support right there. We almost got there today. In tune with that, then right at the 50 moving average below, somewhere in this range, will be the next area of support, and that'll be good support right there. That looks to be right around $95 on the USO, which, by the way, is now down to about $100 here, just a little over $100 at the close today on the markets. All right, now let's get back to the overall market. Let's look at the daily chart of the SPY, and we'll see where we are. So again, here's the overall chart on the daily, and notice the volume kick in today, and this was all second half volume. And that's the amazing thing about it, is the selling that came in today had volume behind it, and again, we talk about that as meaning more. When you have a light volume sell-off or a light volume rally, you always have to take it with a grain of salt. You always have to take it with a straw, kind of say, okay, wait a minute, this, it's on light volume. That means a lot of the big players out there aren't participating. What are they not participating for? Because if the markets are rallying up and the big guys aren't participating, you need to be on high alert. And again, that was part of it. I mean, there were so many things that called for the market decline this week that we hit right on the nail that it's tough to go into all of them. But I'm telling you guys a few of them. The XLF was the other one, and I'll just show you the XLF here quickly. Remember the S&P SPY chart, and I pointed this out in multiple videos. You see this type of rally up. Look at that angle. All right, if we were to make this an angle, it's a nice angle. You're talking about, look at this, how steep that angle is. Now you look at the XLF. Look at the XLF rally. All right, from last week. Look at what a tiny angle that is, and it's probably even smaller than that, but I really accentuated it here, and that was telling us something was wrong. In addition, Goldman Sachs couldn't catch a bid. All right, Goldman had fallen all the way like this, and then last week it got a tiny little up, and it was just setting up for another drop here, and Goldman just couldn't catch a bid. And when Goldman Sachs can't catch a bid, you also have to be on alert. All right, Goldman is like the king out there, the king of the financials, the king of the overall market in many ways. And if that's not catching a bid, then you have to be on alert as well. So keep that in mind, folks. Looking at Lehman, let's quickly look at Lehman. Lehman just got nailed today, down almost 10% on the day, and this thing just got crushed. Overall, it's gotten hit lately. There's a lot of speculation out there that there's some problems there. Also, UBS was the other chart that we keep talking about. And look at this chart of UBS. You're talking about near a double bottom now. And you did get a bounce today in it. It was up about 56 cents, which is just a technical bounce. I mean, you have to have a bounce when a chart looks like this coming into a double bottom. Now, how long does it last? Does it go lower? I don't know at this stage of the game. I wouldn't want to be in it, to be honest. It's a little too high risk for me, considering what happened to Bear Stearns. All right? So it's just still speculation on my part, but that was also another indicator that showed that the financials were not participating in the rally, and when the financials don't participate, something's amiss. Okay, now let's go back to the SPY and talk a little bit about this. So we talked about the angle there. Now you came back in, and you've really hammered on this 50 moving average. And let me just draw in that 50. It's in blue, so a lot of you guys can't see it. This is the 50 right here. So yesterday we touched it, we rallied off of it, we closed off the low. Today we hit it and pierced it, and we rallied again to close just on it. So now the question is, do we have a kind of a pause day sideways action, or do we continue to sell off? We'll have to continue to watch the overall market activity tomorrow, the price action, the time action. It's all a key here, and continue to do our proprietary techniques to figure out where this market is going. I do encourage everyone to join the chat room. Those in the chat room get a leg up on everyone here, as we're giving them minute-by-minute analysis of the various ETF plays for day trading, for swing trading. You name it, it's done in the chat room. And we had some great calls today on QID, buying at the lows before the market reversed, and QID goes up when the market drops, so a big move up there. We called for an approximate bottom on QID today at 37.59, and this was right at the open. It was called, and it went to 37.55 was our call. It went to 37.59, 4 cents off our exact price point, and then rallied up here nicely on the day, closing up about 50, 60 cents on the day, looks like. So a nice call there. In any case, continue to watch tomorrow's price action, as it's going to be key to whether or not we break lower right now, or do we have a pause day. It's kind of up in the air. It's like a 50-50, all right? There is more downside in this market, without a doubt. It's a time correction, not a price correction, so we're not sure how much downside there is, but there is more downside, and we'll continue to evaluate that. But it's more of saying that over the next certain period of time, you're expecting a drop until we get a turn date for the market to start back up again, and at that point we'll switch it. We don't have an exact level that the market's going to go to, and there's differences there. Remember, we focus on price, pattern, and time, so a correction can be based on any of those three. A pattern could signal it, a price could signal it, or time, and a time can be a span. So that's what we're looking at there, folks. We'll continue to update you. NASDAQ, just showing the NASDAQ again. From the highs here on the NASDAQ, and this is the intraday NASDAQ, you saw a 50-point reversal from here to here. Then you got a nice retrace bounce. So again, the fact that we bounced off the lows makes me think that there's more downside in this market. Whenever you close at the lows, a lot of people panic and they think it's going lower, therefore it doesn't. It's a contrarian indicator there. But because we continue to bounce at the close of the day, it makes me think that there may be some more downside. Alright folks, come join the Swing Trade Alerts. Come join the chat room. Wonderful products out there. Great products. We'll see you all soon. Take care. Talk to you tomorrow.